All right, so we have 10 here, so I'm going to go ahead and get started. Welcome, everybody. If my wonderful assistant here will start sharing the presentation. I am here with you all in the fantastic state of Texas, in Dallas in particular, at the BankSocial studios. We are live here with Keith Gray from the Clearinghouse, and we are going to talk a little bit today about some of the myths and misconceptions around real-time payments. Now, the Clearinghouse has been doing real-time payments for a little bit longer than the Fed has been doing real-time payments. The Fed just released FedNow last year in July, I believe that it was. However, the process, the underlying technology, which we won't get into that too much today, but the underlying technology, the format that is used for real-time payments process is actually the same for the Clearinghouse and FedNow. They use the same underlying mechanism to process those payments. But from a credit union standpoint, I am a former credit union CEO, and so I understand how payments work behind the scenes in the accounting department or in your back office areas, right? And I can tell you that I personally had some misconceptions around how real-time payments work. Because to me, I was thinking, ACH is batch, right? You get a file that comes in and somebody has to actually read, look at the exceptions and take a look at what is happening there. And at some point, somebody has to push a button, right, to post those payments. And so I was thinking, well, we're just having to run the batch file, every 15 minutes or every hour or whatever. Well, I can tell you that is not how it works. And, but that was news to me at the time because I hadn't been educated. I didn't learn enough about it to really understand how it worked. I just thought it was pushing the button more times. So do you have another slide to start with, Sarah? Thank you. All right, so let's talk a little bit about who BankSocial is. And we are a third-party service provider for the Clearinghouse. We have a payments hub that we make available to credit unions and banks. And we utilize the real-time payments platform for both FedNow and the Clearinghouse in order to implement real-time payments in credit unions and banks. BankSocial is, if you'll go back one, I think there was a picture of John and I. So I am the Chief Operating Officer for BankSocial. I've been here a little over a year. Yes, I left my CEO job at the credit union to come and join this really awesome company that I have been engaged with for several years now, but I just officially joined last year. Our CEO, John Wingate, is also a more of a newcomer to the credit union space, where I've been around almost 30 years in the credit union environment. John is newer to the credit union space, but as we say in Texas, he might be new to credit unions, but he got here as quick as he could. So he's a big credit union fan and longtime software developer, mostly in the payment space. So that's what we do. We are so thrilled to have Keith Gray from the Clearinghouse with us today to dispel, I should say, some of the myths around real-time payments. And he has a fantastic slide deck that he's going to go through today. We will have some time for questions, a bit of housekeeping. I believe, Sarah, that if you guys have a question throughout the program, you can click on the chat link. Our moderator will read those questions back. Oh, there you go. Oh, what? Oh, there you go. Email. Sorry. Okay. So on the screen, so I just got corrected. Sorry about that. Email your questions to webinar@banksocial.io, and our moderator will be able to take those questions and read them back to Keith and I at the end of the program. So let's kick it off. No time better than the present. It'll take about 30 minutes or so, and we should be finishing before the top of the hour. So Keith, I'm going to let you take it away.
Thanks, Becky. And let's go to the next slide. And Becky, you said the clearinghouse launched RTP a little before FedNow came live. I think you should give credit where credit is due. It's a long time before FedNow launched, right? We the clearinghouse operates payment networks for typically domestic, but not only domestic transactions. We've literally, the company's literally been around since just post Civil War days, and have been in the business of helping our financial community manage the way payments are made. And that goes all the way back to when checks first originated. That's actually why the clearinghouse is called the clearinghouse. That picture on that slide is actually the physical building in New York where the banks showed up at the end of the day and cleared and settled checks. There's actually a bar in the back I've seen pictures from. So the guy picture dudes in top hats, ladies in wide dresses, and then finishing your banking and then going back to have a drink at the end of your day. So that's how the company got started. We launched the RTP network 7 years ago next month, actually. So we're coming into our 7th year anniversary. A lot has been happening in the payment space. We'll get into a little more of that. We can move along. So I joined the clearinghouse, and let's go to that next slide, please. I joined the clearinghouse about 10 years ago now, and specifically to work on the launch of RTP and one of our other one of our other new engagements. But there hadn't been a whole lot happening in the payment space for a long time. ACH got launched sometime in the 70s, I think it was, and then not a lot happened for a long time. And then I would say, excuse me, RTP came along, Zelle came along, same day ACH came along, and we kind of did that all at the same time very quickly. And I think what drove and is driving a lot of that new innovation around the payment space is changing expectations on behalf of consumers and businesses, right? So our credit union members, our bank customers, they can get a package delivered by Amazon in the same day, yet it takes the payment 3 days to show up historically. And so that really, and then you had companies like Uber that really embedded the payment process into the overall experience, which we're seeing more and more of. And I think that drove a lot of changing expectations with consumers as far as how they're able to access and manage their cash flow. And of course, the pandemic on top of that, I think just accelerated that. So what used to be, I think, a nice to have in the payment space, gee, it would be nice if they could pay me faster, as an example. Now it's, what do you mean it takes 3 days or 2 days or whatever it was to actually originate payments? So every study I've seen, every study that's been done that I'm aware of anyway, validates that consumers want more control over their funds. They want to be paid safer and they want to be paid faster. And I think that drove, just in general, the move towards instant payments, which started with RTP and has now moved along with the Fed with FedNow. So, and I think we're going to continue to see more focus on use cases and innovation around payments, specifically in the credit union space. We're seeing a lot of that, as well as with FIs as well. When pardon me a minute, when FIs, I get asked often, well, what's the benefit of turning on instant payments or allowing my members to receive instant payments? And the first thing I say is, well, you're providing a service that your members expect. And if you don't provide it, they'll likely go get it somewhere else. While at the same time, you're driving a new deposit channel into the credit union or the bank, right? It's a new channel for deposits coming in, also allowing you to create additional fee income.
Value-added services, you can typically charge for that. So So more deposits equal more ability to make loans, more value-added services allows you to create more fee income on top of that. Next slide, please. Next slide. So yeah, let's kick to the next slide while we're doing it. One of the things to understand is what's the difference between the way we've been doing things and an instant payment. What's different? And
By definition, an instant payment is just that. You have immediate availability of those funds. We're used to a more delayed process, right? Also with RTP, you have instant visibility into that payment. I know I've paid you and you know you've been paid, and that happens within seconds. You don't have to worry about, did I pay that bill? Am I going to pay that bill? Is it getting debited out of my account tonight? You have complete visibility into the payment. And we're seeing for a lot of use cases, the value proposition isn't always around just the instant nature of the payment, but the fact that I have complete control and visibility over that payment. So that's a key difference. In traditional payment methods, I'm sorry, go back one, please. In traditional payment methods, I have the ability to reverse a payment. With RTP, those payments are certain, closed, settled immediately. So you have no ability to pull those funds back. So in certain use cases, think about paying a merchant. The merchant really likes the fact that I can't pull those funds back. He has those funds, they're guaranteed, irrevocable, transaction complete. So that's a key component as well. And also with RTP, there is no direct debit. You have no ability to pull funds back to debit my account. Again, that goes back into the visibility of that transaction, right? I have to pay you. You can't pull those funds out of my account. I know I've paid you. You know you've been paid. So immediacy, smarter, faster, and complete control by the sender are key components of RTP. Another use case, and across the top there on this slide, are kind of like the base functionality of both RTP and FedNow, I would say, right? It's always on 24/7. And speaking of that, we typically see a very small downtick in transaction volume over the weekend. People are using the network 24/7. Literally, there's very few times when the network just goes quiet. So sometimes it's not the fact that I want to pay immediately. It's the fact that on Saturday afternoon, I need to make this payment and it's the only thing I have available. So I use this instant payment service. In addition to the payment transaction that flows, I think about it as a bigger pipe. I can send not only the payment, but the data associated with the payment. So think about a bill pay use case. I can not only pay you, but I can also send you information related to what I'm paying you for. So it really allows for, and think about a business to business transaction, straight through processing between an ERP system, accounts payable on one end, accounts receivable on the other end. I can not only send the necessary payment information, but through that same channel, that same transaction, the data can travel with it, as opposed to me sending you a bill via email and then you paying me through another channel, and we have to match that up on the back end. With RTP, everything can travel through the same bank rate secure network, nice and clean. So it makes the transaction process not only visible, but very straightforward and very clean on both sides of the transaction. Next slide, please. We knew when we launched RTP that the vast majority of the FIs that use the network will connect to and leverage services from companies like BankSocial. So the majority of the credit unions and the banks that are leveraging the network, and we'll get into the actual numbers on this in a bit, but don't connect directly to our RTP, but they leverage a technology partner like BankSocial to do that. We have probably, I think the number is 30 or 40 technology companies that offer a range of services to credit unions, to banks, that allows them to offer RTP in different ways. It could be, I just want to receive payments, or I want to send and receive payments, which is a lot of what BankSocial is doing as well, as you know. But I guess the key point I should really make on that is there's always a FI on both sides of the transaction. If you're a company or if you're a BankSocial, you can't just put a transaction on the network without a credit union that's backing it. So it is a very FI-driven network with an FI on both sides of the transactions. You can't be a company like PayPal or Venmo, as an example, and make payments on the network without having a credit union or a bank involved. So, and this slide is kind of a moving target. Things change every day in the RTP network. We now have, I think the last number I saw as of a couple of days ago, we had 750 or so FIs on the RTP network. That encompasses about 70% of our US account base. So if you're a credit union member and you want to send a payment to someone, it's a 70% likelihood that your receiver is at a financial institution that's using the RTP network. If you're a company like Venmo, that is a big originator on the network, then it's about 70, you know that you can reach about 70% of your customers. That number grows just a little bit when a new credit union or bank comes on the network. So that's changing, going up day by day. We have about, interestingly, go back one, sorry, we have about, and this is the interesting stat that kind of hit me, because I feel like it sounds like a big number, and it is, I guess, but 250,000 businesses send an RTP payment every month, and about 5 million consumers send an RTP payment every month. And you know, 7 years sometimes seems like a long time, but in the scheme of things, it's a relatively short period of time for the network to have gotten to that scale that quickly, in my view. And that just shows you the demand that's driving this, right? It's kind of a build it and they will come kind of thing. Well, they have come, and that transaction volume, both up from businesses and consumers, continue to grow at a very rapid rate. And now we can go, and you can see the hockey stick view there of the transaction value. We typically grow, we have been growing about 15% a quarter in transaction volume. So you can, you know, it's very easy to kind of see the trend of that as it continues to rise. Let's skip this one and get right into the use cases. That's good. So who's using the network? Well, like I said, there's always a financial institution on both sides. Those financial institutions typically have customers that they're allowing to leverage the service they provide. So small, medium, and large businesses of all sizes use the network. That goes to that 250,000 businesses that send a payment every month. And consumers use the network. On the consumer side, most of the transaction volume is P2P service, P2P use cases, I should say. I owe Becky money, I need to pay her now, that type of thing. Companies like Zelle and Venmo ride on top of the RTP network. And then you have a host of tech companies like BankSocial and bankers banks and corporate credit unions and fintechs and just a host of others that are leveraging the network for just a wide variety of access points and use cases as well. Next slide, please. Again, increasing deposits, providing a service that your members want, therefore enabling customer retention, complete control over the payment, and the ability to create revenue streams is what's driving all of those institutions, I would say, that are looking for providing better services around how payments work for their members and their customers. So we see that continuing to drive forward as well. Some of the use cases that are big volume drivers, and there's probably hundreds of different types of use cases. The big volume drivers are account to account type of transactions. That might be me moving money from my credit union to my bank or bank to my credit union. One thing that we've seen is when you provide customers the ability to have complete control over their funds, they have a tendency to park money in their credit union account or bank account longer because they know if I need it somewhere else, I can get it there quickly, as opposed to having to plan in advance for that. So it keeps deposits held in the main account longer, I believe is what we're seeing. Moving money from banks to brokerages and vice versa is a growing use case on the network. Several of the large brokerage companies offer the ability for you to move money from your credit union account into my brokerage account because there's a hot stock I want to buy, whatever that might be. So account to account, I'm sorry, go back to that. We see a lot of business to consumer volume. A lot of that is payroll and payroll related volume. That could be same day payroll, emergency payrolls, what's called earned wage access, where it's Wednesday now, I need to go grocery shopping, so I need $100 to cover me till payday. We see a lot of that volume on the network as well. We see a lot of merchant settlement as well. So the lady that cuts my hair, she always uses the Square terminal. And of course, being a bit of a payments geek, I was asking her a while back about some of the services Square provides. And she said, without even me prompting, she said, you know, one of the cool things this thing does is like, I got to go home tonight and I got to pay my bills. So I can just click on my Square app and bump money out of my merchant account, which is where all the credit card funds are held, right into my bank account where I can pay my bills. Well, that's exactly the use case that Square uses RTP for. And they do a lot of, so what that does is touches a ton of merchants and small businesses, and it provides value-added services across a wide range of companies and people that get touched by that. Typically, when a credit union or a bank goes live on the RTP network, the first volume they see coming in almost immediately is that use case, whether it's Square or Elevon. It's basically the merchant processors moving money into the bank accounts or credit union accounts. And I've already talked a bit about P2P as well. See a lot of that volume as well. And let's skip this. Let's get into some of the specific use cases. I mentioned payroll. This one's a little bit close to my heart. My first real job, I worked for ADP. And that was back even right at the dawn of the computer age, frankly. So now one of the challenges we always had was getting payrolls processed in short windows, when there's a holiday week or whatever it might be, or maybe I need an adjustment payroll because this didn't work right, or I forgot it to include the overtime or whatever it might be. Now you can just rerun the payroll on Friday afternoon and it shows up minutes later. So that's a big value prop use case for RTP. Next thing, Navy Federal went live recently, receiving RTP payments, and literally the first day out of the gate, they had tons of payments coming in. And just across the board, what we see is I've talked a lot about the volume on the RTP network. What that means is there's enough volume that touches every institution. So when your credit union or bank goes live, regardless of location or size, you'll see volume coming in immediately. And you don't have to be the size of a Navy credit or a Navy Federal to do that either. Next slide, please. Michigan State launched RTP. They had kind of an interesting use case. It was developed by one of their students as some type of a class project where he built they have like an emergency loan. I think this was back during the pandemic, actually. They put in place an emergency loan thing for students. If you need money right now, we can get you money right now. And they leveraged the student that built this use case. Actually, the mobile app leveraged RTP to be able to distribute the funds, which was kind of cool. Next slide, please. Bank Newport was one of the early small FIs that joined the network. And again, and I know the gentleman personally, John Sullivan personally, that was one of the big drivers there. And the first thing he told me after they went live was, he said, the cool thing is not only I keep my customers happy, but number two, it's new deposits coming into the bank, and that's done nothing but increase over the years with them as well. Next slide. A lot of the volume that you would see going live on RTP is digital wallet driven, and that can be anything from a Venmo P2P transaction to a gaming transaction, frankly, a sports betting app. Super Bowl Sunday is always huge on the RTP network because everybody using their apps to put bets on the games or whatever. March Madness, same thing. So we see a lot of volume with money moving from the apps back into the bank accounts or credit union accounts, and probably just as much or more vice versa going into the sports betting apps as well. One of the key growth opportunities and key revenue opportunities for the financial institution is offering corporate-based type of services. And that could be everything from businesses delivering money to consumers, like this slide is talking about earned wage access, to businesses paying business as well. I mentioned earlier about just the value of the complete control over the payment. If you're a corporation, really think about the value proposition of that, especially in a higher interest rate environment, where if I owed a supplier $1 million and it's due at midnight tonight, and I could keep that in my account until 11:59 and move the money and the information relating to that payment, and then have it be settled and closed before midnight. That's a huge value prop to that. And financial institutions that are building those products to offer that service can again create fee revenue on top of that, which has been a big driver as well. We're seeing that as a big growth opportunity with RTP also. One of the use cases that I always thought was kind of cool is truck drivers. If you think about truck drivers, they're all over the place. It used to be, or in many cases, when I deliver something, I need to get paid for it. So sometimes they're carrying cash, and sometimes they're carrying checks, and they have to run by the bank to deposit them or whatever. Well, RTP works perfectly for that, right? So it can be, I can deliver what I'm supposed to deliver. I can confirm with the merchant, the store owner, that I've delivered it, and then he can push payment back immediately, and we can both know it's a done deal, closed and settled. And just being able to distribute money across the country for a use case like that is a key value proposition on that as well. So, I apologize. I know we're kind of buzzing right through here, but I wanted to allow times for questions on the back end. We have worked with companies like BankSocial to really make it easy to move forward and to enable RTP. So BankSocial has basically solved all the technology issues for you. And then we've put in a very easy to manage onboarding process and a relatively automated onboarding process where you can typically get live in a couple of weeks. Being live for 7 years, we've had the time, I should say, to perfect this, and we continue to provide easier ways to get on the RTP network, and frankly, working with companies like BankSocial to help us do that, so they can get you started in the process. And the other thing that we've done, and you can skip to the next slide, is we've really tried to keep RTP an open book and made as much information public about everything from the technology to what it's being used for, to how it's being used, to how you can leverage it. So we have a lot of what we do and what you would need is available on the website. So think education materials for your members, for your customers. We do a podcast once a month, once a quarter, I think, that I can say is really well done because I don't have anything to do with it. But it's one of those podcasts I listen to, and it usually focuses on some some person using the network, how they're using it, the value of it. I listened to a recent one we did with it was a car sale, the company that automates the used car selling process, and the guy was very interested in the value of that to them, right? And so anyway, I highly recommend that. And also we do a monthly publication. We call it the Real-Time Rundown. You can sign up for it on our website right there. I highly recommend that as well. It just keeps you up to date on what's happening in the world of instant payments in general and RTP specifically. So I highly recommend our website's a great resource, and I highly recommend you using that as you see fit. So Becky, I'll kick it back to you at this point.
Thank you, Keith. And I do have a couple of questions that we'll ask here in a moment. I just want to highlight, he mentioned several times that BankSocial is a third-party service provider for real-time payments with the clearinghouse. They are a partner of ours, and we assist credit unions with both the send and receive aspect. And he mentioned that a lot of the P2P capability and the A2A capability happens in a wallet, and BankSocial happens to be wallet specialists, regardless if it's in fiat currency or digital assets. And so we have a quick video of what our process and wallet looks like, and then we'll open it up for questions. Okay, some funky music. I was doing a little jamming there. Sorry, getting excited. One of the things that I hear a lot from financial institutions, Keith, is that, and there's a couple of questions or comments that I hear a lot. One of them is faster payments, faster fraud. Financial institutions are just experiencing a huge amount of fraud, whether it be digital banking account takeover, whether it be, some of the social engineering schemes where they're convincing people to send money. So is that really true? Faster payments, faster fraud, and what makes RTP different in that regard?
Yeah, that's a good question. And frankly, it's something from an industry standpoint that we've been concerned about from the beginning, right? Would enabling faster payments equate to faster fraud. Well, after 7 years, it hasn't. I think there's a number of reasons for that. In a instant payment environment, you're dealing with different challenges as it relates to fraud. The upside is, by nature, the RTP network, and I would say FedNow as well, which is very similar in this regard. It is a credit push network. So the sender has to originate funds. You can't pull it from my account, like I mentioned earlier, right? So a lot of the fraud that we see in other payment channels are because there is that debit capability and I don't have visibility into that immediate, right? So money just gets pulled out of my account and I don't know it for a couple of days. There is no possibility of that with RTP or FedNow for that matter, right? So the network by definition is more secure in that way. I would also say that the key in a instant payment environment is protecting the front end. In other words, the device that's being used, making sure it's Keith on the other end of that mobile phone or that browser, right? We were already doing, from an industry standpoint, we were already doing a really good job with locking that down with things like multi-factor authentication, know your customer routines, biometrics, with the devices themselves. So I would say we're doing a really good job locking down the front end. The thing to pay attention to as it relates to fraud in an instant payment world is the authorized fraud. I meant to send you the money. So I originated the payment, I sent it to you, but you tricked me into doing it. Now I want my money back, and that money's already gone, cleared and settled, right? So a lot of that comes down to educating your members, your customers, and helping them not to fall for those types of things. And as we all know, those bad guys are getting increasingly more better
sophisticated.
at tricking.
Mm-hmm.
Yeah, sophisticated at that. Yeah, so it's something that, I mean, heck, I get emails that, click here. It's like, I even say, wow, that's good. I might have even fallen for that. So anyway, it's a constant battle for sure.
It is, and that is one of the things you noticed in the video. We talk about the additional security measures that we're taking here at BankSocial with our integrated wallet, which can be embedded in a financial institution's digital banking platform or as a standalone application. But we have included some of those risk mitigation efforts, not only to identify who is sending the payment, but just to make doubly sure, did you really mean to send this? This is outside of your normal parameters, those kinds of things to just help consumers, give them that one little extra, are you sure, before they send that payment or push the button. One other thing that I hear a lot from financial institutions, Keith, and you did address it a little bit earlier, and we've seen this with the clients we've implemented RTP into, is they immediately start getting deposits in. I mean, you just talked about the Stripe, the Clover, the Uber, Lyft, these kinds of places, especially as it relates to day workers or gig workers who want to get paid immediately in real time. I work today, I want to get my paycheck today. And those deposits immediately come in. And for credit unions and banks today that are really looking to get low cost deposits, that's a great way to have that happen immediately. But I do get people who say, you know what, our members they're not asking for this. Now, you showed us data that says that they're absolutely using it. So why do you think members or customers aren't really asking for it?
They're getting it somewhere else already, right? Or they're looking somewhere else. Like, Zelle has something like 30 million, 40 million customers. Venmo has almost as many, right? So people are using instant payment services, right? They're using fintechs. They're using other FIs that offer this service, right? So I don't think that What we're seeing, obviously, is the demand is there and it's expected. And just because you're not hearing from your members about it, that doesn't mean they're not already using it somewhere else. So I challenged an FI a while back to say, okay, just do a poll yourself. Ask your customers if they want to get paid smarter, faster, and better, and just see what they say. And the guy was like, no, never mind. Right? Not even any need for that. Yep.
One of the things I say all the time is let's look at your data, right? Whenever I was a credit union CEO, we pulled the data and we looked at how much money was coming in and out from all of these different fintechs that were doing instant payments. You mentioned several of them, and it was eye-popping. I mean, it really was the amount of money, because at the end of the day, more money was going out than was coming in. And I think that most people, if you polled them, like you just asked us to think about doing, if you poll people, they would really prefer not to have 10 different payment apps, right? In order to do what they needed to do. If they could do it all at their financial institution where that they trusted, I think they would prefer that. But they're doing that because they offer it in their financial institution.
Exactly. They'll go to their FI first,
Yes.
but then they'll look for the service elsewhere if they don't get it from their FI.
Exactly.
Yeah.
All right. I'm looking at my wonderful assistant here and moderator. Do we have any other questions coming through? Okay. All right. Well, Keith, thank you so much for joining us today and for educating us about real-time payments. We will send the recording link out to everyone who registered, as well as people who watch this live, so that you guys can share this with your team. And thank you so much for joining us today.
Thanks, everyone. Thanks, Becky. Well done.